Now, until the beginning of August, China's stock market had been basking in the glory of being the world's best performing stock market. You can see on that chart there, which begins in January, an 89% climb. But the last 2 weeks, which you can see in red there, have shown quite a dramatic change. The main index down by 19% in 3 weeks, should I say. And given the importance of China's role in the global recovery, the tumble has created quite a stir, affected the markets right across the globe yesterday. So is this a correction or the start of a bear market? Alpesh Patel is with me to make sense of this, Chief Executive of the investment firm Praefinium Partners. Good to have you on the programme. So what is going on?
Well, you know, partly it's a reflection of too much too soon. As you said, the amount of the rally for the year so far was bound to lead to some degree of profit-taking, especially as the jitters come in, particularly in a quiet month like August when there's not as much trading going on. So a small move can snowball. And not only that, let's not forget how well the US markets have been doing recently. So some of the money has come out of China, where it thought this is the only place in the world, alongside, say, India, where they're going to get some growth, and it's moved back into the mainstream markets.
And when you say growth, you mean growth in investing in stocks and shares and market increases. That's what you mean, isn't it? You don't mean growth in economic terms.
In both terms, because the growth in the shares is fueled by the anticipated growth in the economy, and China's going to have positive growth this year, going to have positive growth next year, whereas for the rest of the world, we were pretty much looking at negative growth in all the major economies, so the risk capital had shifted there, but now it's pulling back because of the great performance elsewhere.
Now, in terms of the Chinese markets itself and what's happening in Shanghai, many just say, well, gosh, it's China, it's a bit bizarre out there, things are incredibly volatile all the time. Don't be shocked by this big drop in 3 weeks.
No, when you take an index of the major Chinese indices, not just the Shanghai index, then you see that since 2005, a 20% drop is not unusual. It's happened about half a dozen times, and every time it's rebounded. So the Chinese local investors, very resilient, and they'll just use this as an opportunity to buy in. And the stocks on an earnings basis are not necessarily overvalued. So there is that aspect of it as well. But relative to the rest of the world's actually caught up a little bit in that it's not been as bad elsewhere as we thought it was going to be.